Joining us now with more on the risk calculus for Chinese companies in the IPO pipeline, Steve Cakebread, Chief Financial Officer at Yext. He's also the author of the IPO playbook. You've spent time over there working for HP in China. You know about regulators. Your comment is that they can be fickle and changed by the country's government at a moment's notice. And that kind of seems like what happened with Didi. And people say, well, Didi was warned. Well, everybody gets warned, but usually nothing happened. And this time something did happen. What changed in the last, 2 weeks in China?
Well, Joe, thank you for having me on this morning. Yeah, when I worked over there in the 80s, there was Chinese business law, but the reality of it is policy. And CCP owns everything in China. So when they want to change the policies, you have to shift. And in this case, they're doing it very, very quickly. I'm not exactly sure what the motivations are, but keep in mind, you could list a Chinese company in New York Stock Exchange because you could lose money and that was okay. In the Asia exchanges, that's a little bit more difficult. And I just wonder if there's not a focus back on bringing that money back to Hong Kong and Shanghai and forcing those companies to list in those markets rather than in New York. But policy changes minute by minute over there, and one has to be very aware that policy can change the next morning when you wake up.
So that's just an excuse that people say we're worried about our data,
Exactly.
And then they're worried about their data coming over here. It's really not that. They just want the money back, not being made here by U.S. investors, but back.
I think that's a part of it, because keep in mind it's wealth creation for your citizens, and that's a big part of the CCP agenda. I do think, Joe, you hit on a point, though. Data and control of data is going to be bigger and bigger role for all our governments and countries. And China clearly controls the data that they have on their citizens. So part of this agenda is to get the data on the rest of us as well. So data privacy and data control and big data usage by CCP is going to be a big part of what you'll see, I think, going forward.
The point was made that investors here love the Chinese IPOs because the rewards can be higher and they're willing to take on the risk that's involved. Well, now it's become very apparent what those risks are. Do you think that it's over now, that you wouldn't take that, the additional risk outweighs the additional reward you can expect from a Chinese IPO? I don't know if I'd go in now.
Yeah, I agree. I'm not sure as the policies change whether those risks become rewards or not. I actually believe there's other countries. Clearly, India is an aspiring country and there's opportunities there. And we know they operate under Commonwealth law. So we all kind of are familiar with those rules. And it's not policy, it's Commonwealth law. So I think people have got to step back, take a look at this. It's appealing because the Chinese market is sophisticated and continues to grow, but it's not appealing if somebody changes the rules overnight on you.
So we can still, as far as you're concerned, in the IPO world, you can still do domestic IPOs, SPACs, even India, something like that, but maybe avoid the risk involved with China.
Yeah. Well, the companies that I started for the U.S. versions, we are all in Hong Kong. I wouldn't be in Hong Kong today if your life depended on it. It's China. It's under China rules. It's a dream that one country, two systems was going to exist. It doesn't. And I think people need to be aware of that. And I think there's better opportunities with a lot lower risk outside of China.
Shepard Smith here. Thanks for watching CNBC on YouTube.